Right. A very good morning to everyone, and good afternoon to some of you who are not located in Singapore. Right. So for I'm Samuel and I'm your moderator today. So for this panel discussion, what we have planned is basically split the panel discussion into two different parts. I think the first part is more on the team where we talk about the roles of actuaries in InsurTech. So Kay did mention about her joining a InsurTech firm, and then with a lot of questions coming through as to what do actuaries really do in this InsurTech space. So in this first part of the panel discussion, what we aim to do is in a way to demystify what the world of InsurTech is for actuaries like us, right? So for this second part of the panel discussion, what we'll be doing is to talk about the current application of InsurTech in health insurance. And then also we will talk about what are the future applications and how does this space, how is it going to evolve in the near future? So with that, let me introduce you to our panelists today. First up, we have Alex. He's the co-founder of a fast-growing InsurTech startup with presence across Asia and virtual insurer in Hong Kong. Previously, he served in leadership roles at a number of InsurTech startups in US and Asia. In addition to that, he had been a consultant with the World Bank and Deloitte Consulting. Alex is also a vice chair of the International Actuarial Association in Health section, and he is also a fellow of Society of Actuaries. He has an MBA from UC Berkeley and bachelor degrees in mathematics from UCLA. Our second panelist, Alan, is currently the head of R&D for Spark, Coherent's proprietary logic and rules engine. He is a senior member of the Actuary team leading clients project. In his role, he's focused on helping Coherent's product manager to find innovative and practical ways in its ever-evolving technological capability. He believes insurance is a noble profession and centered in protecting lives and legacies, and is passionate about expanding access to quality coverage through technology. Lastly, we have Iwan. He's currently the head of commercial at Grab Insure, Grab's insurance distribution arm. In his role, he's responsible for general commercial and business activities, including business development, partnership development, and product development. Iwan is a qualified actuary of around 15 years. He has worked with companies such as Mercer, Milliman, Allianz, and SCOR, and in geographies across Australia, Europe, and Asia. So let's welcome them. Hi. Hello, is everyone there?
Yes, I'm here.
Great.
Yes.
Thanks for agreeing to be the panelist today. So I think as a first up for the role of actuaries in InsurTech, can I invite you to basically, tell us a little bit more about your day-to-day work and perhaps your background as well. Ellen, do you want to go first?
Sure. Thanks, Sam. So yeah, I guess my day-to-day can be quite different day to day. But I found that working in InsurTech, and especially one like Coherent, which is focused on kind of helping insurance companies and actuaries in insurance companies often. So I serve as a counterpart to kind of my old roles quite often. So part of my job is working with clients and thinking about how they can build out their models better, how they can take the actuarial information and the product models that they have and make those more accessible and deploy those out into the various places that they need to be, whether that's a sales tool or a customer app. And then the other side of my job, which is kind of the R&D side, which I quite enjoy, is so we've got this technology, and just being able to explore that technology and find new ways to apply it in business. So drawing on my experience from working in the actuarial field and across pricing and valuation and modeling, and just thinking about how could this be used in the real world by real actuaries to solve problems. And so that sometimes that looks like building an Excel model, and sometimes that looks like discussing with other people about underwriting or claims issues in the industry.
Right. So just wondering, because you have also worked in quite a number of MNCs, right? So how different is it for you?
Pretty different, I would say. I think the most striking thing for me is the speed of innovation. Obviously, Insurance is not well known as being a fast-moving industry, and so just the speed and the pace of change and building things is quite striking. But I would say one of the things that I feel like has been good about being an actuary in InsurTech is that I can also provide a perspective of the reasons why things are done the way that they are, why we need to be careful, why we need to think about the impact. And so, as actuaries, we study the risk, we run the numbers, we apply kind of our expertise to business problems. But there are reasons, there are good reasons for a lot of the slowness in the industry, because I think as I kind of said in my bio, I believe in insurance, that it's noble and it's protecting lives and legacies. Insurance is about that kind of management of risk. And even though we get kind of a bad rep sometimes from outsiders, that's really at the core of what insurance is about. And so, when people complain that insurance is slower, it doesn't innovate fast enough, part of the reason is because we have to be careful with our clients' lives, with our customers' lives, and their livelihoods. And so being able to bring that back and being able to focus the conversation on how we can really help insurance companies and actuaries and the business people there do better instead of trying to disrupt an industry, which, I don't know if disruption is really what we need. So, we really see ourselves as partners, and that's been, I think that's been good for me, to kind of come from a place, see the other side looking in, but then also be able to bring that perspective of that we have reasons for doing the things the way that we do, and that they're good reasons, and let's try to find a way forward together.
Right. So I'm also thinking about from this aspect of your motivation, right? I mean, previously when you were working with this with the MNCs that you have worked in, your motivation is probably a little bit different. I mean, like when you move on to InsurTech, is there anything that motivates you to do that?
Yeah, I mean, I would say I've always, in a way, I've always been a tinkerer and a builder and an explorer, in terms of technology. I think a lot of us are, honestly. So, I think a lot of actuaries here will have a story of, their first year working as an actuary, writing some VBA, discovering VBA, and then writing some macro to do something. That's a bit of InsurTech if you think about it, right? I mean, you're working with Excel, and then you find out about this technology and you try to find out ways to apply it. And so throughout my career, I kind of always was doing that, looking, let me learn Python and let me see how I can apply this to my daily work, or let's look at using these different software solutions. So I was always very excited about technology. And so I think, when the opportunity came to join an InsurTech, and there were some openings, then I kind of jumped at the chance, to go and see how it is. It was a little hard, and felt a little bit risky to leave kind of an insurance career, because it is quite stable, obviously, as an actuary. It's one of a really great thing about the actuarial profession is kind of the stability and knowing that, it's kind of easy to have a job and keep a job. But I wanted to take a risk and try it. I felt that if I didn't do it, I would regret it. And to be honest, I think that as an actuary, I always felt like I did have a chance to go back, even though it felt quite risky at the time. I knew, if I try InsurTech for a year or 2 years and it doesn't work out, or it's not for me, I was confident that I can come back into the profession and kind of find a job within insurance. So in that regard, when I really thought about it, okay, how risky is this? And I thought, oh, actually, I think this is worth a shot. Yeah.
Right. That's very assuring to hear. Right.
Yeah. So anybody who's considering it, I would say just go ahead and try.
Right. So I want to move on to Iwan for a little bit. So I mean, in a way, because Iwan is from Grab, right? So and Grab in the InsurTech space is kind of different. I mean, it is operating in an ecosystem with many different arms to it. Like I think right now it has also gotten a digital bank license as well. So I'm just wondering whether your day-to-day work and your role, is it different in such a different space?
Yeah, I guess I would say it's very different. As in my role is not actually an actuarial role at all. So it's actually more of a business role. So just to give a bit of context to everybody who might not be familiar of how a tech company is structured. Well, this is my only tech company, so I'm just basing it off what I know of Grab. So other people could be different. So in Grab, we are organized by business verticals or tech families, as they're well known. And there's three big teams. There's engineering, product, which is not an insurance product, it's the actual tech product. And then there's business. I sit within the business team, which is generally responsible for everything that's not covered by engineering and product, which covers a lot of spaces. And so I work more as a business owner rather than an actuary. But my day-to-day life, actually, my actuarial skills and background comes very handy, actually. I can probably give a bit of examples of maybe working internally. Actually, this is something that surprised me as I came out of the insurance industry, is that actuaries are actually very well respected. So the sheer fact that I was an actuary, despite not knowing a lot, actually lends a lot of credibility in my words within the Grab for some reason. I'm not sure they should be doing that, but the actuarial title does seem to help a lot. And similarly, when working externally with insurance partners, it does help that they are working with someone who does come from the industry. But going back to your original question about how it's different to work from Grab, I think Grab is a bit different in that we have a lot of different business verticals. I mean, we have people working in transport, in Grab Food. We, as you say, we have Digibank now. We have a lending team. We have a payments team. We even have a wealth management team. So these are all areas where maybe not every actuary would have access to. And I think a lot of actuaries probably meet wealth managers once in a while and maybe a payments gateway once in a while. But it's a very different experience meeting people who work in transport. I probably can't say very much, but I'd like to say there's a very humbling experience to actually go down and meet some drivers face to face, and the people, for example, who manage the vehicle rentals business, to really understand how things work on the ground. I think it's probably a bit different for other people, but my career has always been a bit of an ivory tower. So I was a consultant for most of my life. And then when I was working in the insurance industry, I was working in the regional offices. So I really never had a lot of face-to-face interaction with our end customers before Grab. And it's been a very humbling experience actually talking to people who really use our products. I'm sure maybe some other actuaries who work in product development and distribution and insurance companies would also get to meet their clients face-to-face, but it's something that I never expected I'd be able to do as an actuary. And it's been a very interesting experience.
Right. So I mean, before you launch a product and things like that, do you go cross department and then speak to them? I mean, like what kind of process that is? I mean, if you could give a example to it.
Yeah, actually, that's a really good question, because for us, Grab Insure, we are the exclusive distribution arm for insurance throughout the Grab ecosystem. And we've been doing a lot. I think recently there seems to be a trendy to talk about embedded insurance. And I think it's safe to say that Grab has been doing that for the last 2 to 3 years, a lot of embedded insurance. So we embed insurance into your rides, into your package delivery, and a few other products as well. Like we embed insurance into lending, which is not a new concept really. So we do tend to work a lot with our other verticals, especially transport. And it's an interesting experience. I think what Alan said actually resonates with me quite a lot, because for example, when I'm talking to the transport team and organizing that package insurance, they will be asking a lot of questions about why certain clauses exist, when it really doesn't make sense and it really impacts the customer experience. And that's where actually an insurance background really does help in explaining the logic of why certain clauses exist. Usually it's to prevent fraud or moral hazard. And so it's a very enlightening experience. It really does, I don't know, maybe I'm just a bit naive for myself, but it lets me look at the insurance industry in a slightly new light from a perspective that really doesn't come from insurance. So that's probably the most valuable thing I've gotten so far out of working from Grab.
Interesting, right? So I mean, moving Okay, next we move to Alex, right? So I think Alex has a very interesting profile as well, because I mean, you are a co-founder yourself, and you have started quite a number of companies. So I was thinking, like, perhaps you could share with us your journey towards starting up a new company. What are the challenges that you face and stuff like that?
Well, the challenges are certainly a lot to cover. But maybe I think from echoing what Ellen and Ewan shared, certainly it's very true in terms of when an actuary is joining a startup or insurance technology company. In maybe I'll add some perspective as starting a company or joining a startup at a very early stage when there's less than 10 people. That, it's in the role that you would never really expect in the past, where actuaries are a little bit more conservative or stable and comfortable in their own role and stepping out of comfort zone and jumping to startup as a very early employee. But it's starting to be the trend. And as an early employee is quite different than joining a startup that's relatively more mature now. And what you expect is that you're joining a company that doesn't even have furniture. So what your day-to-day may actually be shopping around IKEA and then putting IKEA furniture together. And you actually don't know what your product roadmap is, right? It's like, okay, at this point, what is really our business? What's really our differentiation? And what's really our product? And when you're joining that core group of kicking things off the ground, that's actually a tremendous experience if you have that opportunity. But of course, I think from the perspectives too, is that you'll be taking a lot of risk, right, at a very early stage, because that company may not have any funding, may not actually have any traction in the business model. So it's quite different. And when starting a company, a lot of actuaries are starting now to start a company. I think is really great. And it's actually driving a certain amount of change in the industry, because in the past, where there's a lot of InsurTech firms out there without really actuaries with a deep expertise or deep knowledge, they actually aren't really on point in what the insurer as well as the insurance industry generally needs. So when the actuary is actually joining on board, it actually helped them focus a certain amount of ideas on what's actually feasible, practical. It really ability to really accelerate that process of what we call more like a design sprint within our organization, right? Is that we have an idea, taking a concept and checking the value and the feasibility and also the business viability. And actually being part of the process, it really accelerate what we actually can do and also doing the validation. So those are very, very key within the organization. And in terms of my day-to-day these days, it's really a lot about, I meet with the product team. So similar to what Yuan talks about, we have a digital product team, that's what we call it. But we also have an insurance product team, because our organization has both an insurance company as well as a technology company. So they actually have to work really well hand in hand. And we have actuaries working both sides. We're on the digital product side, but also on the insurance product side, so that they can actually have really productive conversations, kind of what Yuan talks about of policy wording, how to improve the experience and journey, and also about how to take into account of the internal operation. So a lot of our actuaries are also data scientists. So how we internalizing the data, how we use the data, how we make sure that in the journey or from the operational perspective, the data that we capture is actually usable at the end of the day. So as I think most of us as actuaries within any organization, we are heavy data users. So we know what we want and how we want to use this information. So this is extremely, extremely important. And another thing is that we also work very frequently. It's more atypical for actuaries in other organizations, is that you work very closely with designers in technology companies, right? So when you're developing products that you're working with UX, UI, product designer, some people are more cross-discipline. So you actually have that ability to influence or providing insight and working together with a very untraditional group of folks that you typically wouldn't have interacted with in the past. But these days, in terms of growing the business, the focus is really about partnership as well as the scaling the team and the HR. One Degree has actually headcount growth-wise has grown very quickly. So obviously you can imagine about the organization structure, organization design, how we really delve into different markets. We also now have an insurance brokerage in China. So it's about how we really spread and also plan out the resources, and that part of planning and strategy is very important.
Just wondering, I mean, like, because what kind of actual skills did you use? Like, I mean, like when you are a co-founder and also at the same time, because I mean, a lot of InsurTech, right? I mean, one of the areas that people look at is how to raise fund, right? So did your actual skills help in that?
It lends credibility for sure, but raising capital, it fundamentally still takes a team's effort to get there. Fundamentally, it's about how you garner trust in the business model or the business opportunity you're after, right? And a lot of times it's really about storytelling, also the sales skills involved in the fundraising. But being an actuary certainly will lend the credibility to the business model, as well as when we talk about our business, the viability and the projection, as well as the assumptions that goes into it, is all very key for actuaries to be taking part in that. Because in the past, not only in one degree, even in the past with other startups in the US, where although I wasn't a co-founder in those organizations, but heavily in part participating in the fundraising process, those was also very enlightening conversation. So I would encourage that any actuaries looking into joining a startup, if you're able to have the opportunity to be part of the fundraising process, certainly take the chance and take the opportunity in doing so. But in terms of skill set, it really varies, right? It depends on the type of InsurTech you're joining. So for us, that we have an insurance company, so at the very beginning, joining InsurTech is just meaning that you still do a lot of your typical actuarial work, from pricing, reserving, valuation, risk management. So you can envision that starting an insurance company from the ground up, there's no policies in place. So there's no models, no reserve models in place. So we need to all get these things ready and prepare for it, right? But for the same time that you're really becoming more like a utility player within an organization. As the organization evolves, there's other opportunities in which that you maybe tap into, such as what I mentioned in digital product side, or you actually be part of the business planning or be part of fundraising. So there's a lot of opportunities within a startup or insurance technology company that may not be readily available in a traditional organization.
Right. I've just another question on this. I mean, what is the most common question that investors ask you when you are in a fundraising setting?
More common questions. It's whether actually you believe in the business model yourself. So oftentimes that I would say fundraising in Asia is a little bit different than fundraising in other parts of the world. And in Asia, especially as an early stage startup without any revenue, what they care about is whether you're investing your own money. That's one thing. And second thing is whether that you are vested in the venture. So for example, when Alan talks about that, there could be a safety net to go back to other organizations. But when you're kicking off as a co-founder, it's very common in any startup environment. You have a very stringent non-compete. So you really have no way out. So for example, like for when we do fundraising, the investor will be looking for that. Hey, you have such a great idea, right? How am I going to prevent you just, hey, leaving this venture and starting something to compete with what you're doing now, right? So from that level, if you're starting a company, you have to come with that resolve that, hey, this just have to make it work, because you have a responsibility to the investor, to the colleagues, as well as any friends and family actually been supporting you through the process, because you really have no way out. Because after this, I probably can't find a job within the insurance industry. So maybe I have to open up an ice cream shop or doing something else, but that's all good. So family is that is a result that you need to have if you're starting a company. But if you aren't in this position of founding a business, but if you're joining an organization, I think you have a lot of flexibility. Certainly, being an actuary, you have a lot of opportunities, and you can go to even other insurance technology company, not necessarily going back to an organization like an insurer or reinsurer or consulting firm. But you really have to kind of figure out what is it that you're after. And I would say for any technology company that you join, whether insurance or not, you should plan out what are your key objective and learning requirements that you really want to get out of this experience.
All right. Okay, that's very interesting, and thanks for sharing on this on the role of actuaries in InsurTech, right? So moving on, we will move on to the second part of the panel discussion. We have quite a number of questions coming through. So for those of you who have just joined, please note that there's a Q&A button at the bottom of your Zoom screen. You can post your questions there and we'll get to it later on. All right. So for the second part, I think what we want to find out is perhaps also what are the current applications of InsurTech in health insurance. So I was thinking because Ellen was also working a little bit on the tech space and stuff like that. Perhaps you could brief us a little bit and let us know what are the current applications that you have seen.
Sure. So I think, kind of what Alex was saying about actuaries and data science, actuaries are also data scientists. I was reflecting on that a little bit just now, because I think that is true. I mean, and obviously, I think over the past 5 or 10 years, there's been a lot of conversation about the exact distinction between actuaries and data scientists and where those role. But I think, wherever that lies, there's no argument that actuaries do deal with a lot of data. That's kind of inherent in our job, knowing how to look at data, process data, and then take that to kind of business conclusions. And so I think about that with regards to the kind of health insurance technology. A lot of health tech is focused on collecting that data, with wearables and electronic health records, and all of the different ways that we're trying to get more organized about the information that we have. But then, kind of the result of a lot of the technology is that we just have all this data, and it can be hard to know what exactly to do with it. And so I think what we see a lot in terms of health tech is how to, well, I guess 2 things. One is how to sort of shorten the feedback cycle. And so, because I think what a lot of companies are realizing is you can't just have a very long cycle where you collect data over the course of a year or 2 years, right? And you just amass a huge amount of data, and then you take a 3 or 6 month project to do some analytics on it, and then you make a change, right? So that's still kind of a very slow process. So how can we advance that? And that requires a bit more thinking, thinking about the specific data that you want to collect. So becoming more targeted and flexible in how you're collecting the data, which requires thinking about what you're going to do with it, kind of preparing the algorithms, getting kind of this idea of setting up an agent that not an insurance agent, but some piece of code or an algorithm that's going to act on your behalf, right? So how can we kind of react to this data that's coming through in real time and feed that back to customers? So I kind of see things moving a bit more in that direction. I think the machine learning algorithms that we're talking about, less so like maybe, I mean, still a place for the kind of the GLMs and the random forest models and clusterings in the world, but I think more and more of the kind of reinforcement learning and real-time kind of learning models that we're going to see with the tech.
All right. Yeah. So I think we've on this, perhaps also to get Iwan's view on it. I mean, because I would believe Grab's data is even more massive, and also, I mean, there are different business in the whole Grab super app. So how is the data integrated? I mean, like, how much of interaction is there?
Well, okay. Yes, you're right. Grab does have a huge amount of data. We do collect a lot of data, for example, from the transport side, especially, and also from the financial services side. It is a lot of data, and it is well integrated in the sense that there is actually quite a large central data science team that does analyze it. But I think the main difference is that Grab, because of its background as a transport/mobility company, really focuses a lot of its attention on using that data to improve the customer experience of the different apps. And they do use it as well to improve the customer experience for our insurance customer journey, for example. We do that quite a lot. And that's really primarily where we are focusing the attention of the data on. I know there is a lot of conversations that there are potentially that this data could potentially be used for, say, better underwriting. And I think we are still developing our thinking on that. I have a personal position, emphasis on personal. This is not Grab's position. It's that this kind of data it could potentially be used to underwrite and predictive underwriting, for example. It has a lot of data points. I've gone through the various data points and data fields that we have. It's a huge amount of many hundreds of inferred and actual data fields. But I have a slight discomfort towards that. I feel that this kind of data should really be focused on you improving the customer experience only. Especially, like an example I can give you is that we have a lot of data fields that can be pre-filled when doing application forms. So we've been trialing that, and that has worked really well, and it's improved the conversion rates and the NPS of the customer experience, the sign-up experience. That's worked really well. That's a no-brainer. Where I get a bit more uncomfortable with a lot of the discussions are happening around the industry, not necessarily within Grab, is whether they could be used and passed over to the insurer to do underwriting. That part, I think it's a bit more discomforting to me, and I don't think that would happen. So I think for us, because we're a distribution InsurTech, we would really focus it only on the customer experience improvement, and we wouldn't work on it and use it more for the underwriting. We probably will use it, for example, in offering in conjunction with embedded products. Like, for example, I mentioned our lending products. And this is probably a bit of a surprise to those of you based in Singapore, but actually in other markets in Southeast Asia, a lot of protection and health products are actually not available to be paid on a monthly basis. Some of them can only be bought annually. And if they are actually provided monthly, the monthly factor that you would normally apply to the annual premium payment is not 12. It's actually something ridiculous like 5 or 6. So people who are actually trying to pay monthly are severely penalized for this. So another product that Grab has actually is to offer a monthly installment plan based on the Grab Lending's balance sheet to actually provide a more affordable insurance. So of course, when you do that, you would use credit models, and the credit models would use the big data. But again, I would argue that this is more of a customer experience and a customer value initiative instead of doing underwriting. I think our thinking for using the really huge data sets that we have for underwriting is still very much evolving. And I think if insurers have good ideas on how to use that in a way that won't disadvantage customers, I would be very interested. But I think until we're convinced that it won't, discriminate or against certain segments of our population, I think we'll be focusing it primarily on customer experience.
Right. So I think there's a very fine line between what is a better user experience, right? I mean, like, people could feel that it's a better experience, but then, I mean, you could be using that data in a way that you think that you shouldn't be using it. So, I mean, how do you draw that line?
Well, I think usually the line that we use is that would we personally want our data used that way? Because all of us who work at Grab, of course, also Grab customers. And I think the one thing that does actually surprise me about Grab when I first joined it, considering its maybe less than stellar reputation a few years ago about the data breaches, but actually is how seriously they're taking data and privacy issues. And so, for example, they have a central data governance. And actually, if I want to use any data and sending it to insurance partners, I actually have to go through a lot of hoops with both compliance and a special data privacy officer. So I think in that regards, nowadays, it's so strictly governed about what we can and can't use it for. I'm not really worried about that at the moment, because really the first customers of any product actually is always going to be ourselves. I imagine Alex and Alan can probably relate to this, but we are always the first testers of any new product, and we buy it using our own personal money. So we have a very vested stake in actually really what the products that we design.
Cool. Right. So I think moving on to Alex, right? I mean, you are also in a tech space, so I'm just wondering, like, what kind of applications you see, and also understanding that you are based in Taiwan. So is there any new developments in Taiwan that we should know about?
Yeah. So fundamentally, I think the role of technology was in the InsurTech is fundamentally any technology applied in an insurance context. So what is fundamentally what we're trying to do within the industry of the broader InsurTech ecosystem is about removing friction, right? It's like the things that weren't done well, or that there was a lot of barriers in the past, now it makes it much easier. So in Taiwan, there's one initiative I can share is that within the regulators, there's been driving initiative using blockchain for a medical insurance context. So what they do there is that previously the friction that we face as an individual submitting a medical claim, and especially in the context that where you have a lot of policies for insurers, right? You have a coordination and benefit issue, and you have to go to different insurers' website or finding their agent to submit his claim information multiple times and getting a lot of receipts. So this initiative is relatively new, is that they're using this blockchain for the user, for the end policyholder to submit once. And through this blockchain, to automatically pass over the information across various insurance company where this individual has a policy. So now you have a single source of truth, and getting the industry to come together and plug into this smart contract and leveraging this to drive a better user experience, right? Removing those friction. And also kind of remove the friction for the insurers from the operational standpoint, where then they don't have to really validate or confirm that, oh, what other policies do you have? And then do I need to do a special calculation on coordination benefit? So this is a use case where it's going to be happening more and more in the insurance context. And in the past, that where, you know, this is more than a couple of decades already, where the predictive modeling and the applications on AI, price optimization, all these things are continue to evolve, and now it becomes a lot more sophisticated, and the predictive power is also increasing. So with that, there's also a lot of advancement in which that the tools that we're using from day-to-day basis, as from actuarial tools, but also from a broader industry of technology deployment in the government, in the private sector. These are all things that are enabling better servicing and better experience. Distribution has been the low-hanging fruit, and that is where a lot of private sector has been focused on, because at the end of the day, it's about how we sell more and sell more personalized products and meeting the customer needs. So that will continue to be there. But these days, it has been shifting to a lot of focus on how we are automating or operationally doing better from a digital transformation standpoint.
Right, cool. Another thing to touch on is, because I think we mentioned about embedded insurance earlier. So I'm wondering, I mean, do you have any idea whether this could be used as a means to promote health insurance to the general population? I think on this, perhaps, Iwan, you want to touch on it, because I think Grab is, I mean, doing quite a bit of subscription-based embedded type of insurance.
Yes, we've been doing a lot of experiments, usually on embedded insurance, subscription insurance, and also traditional insurance. To be honest, the reason why we're doing a lot of experiments is that we are trying to find the right product market fit. Yeah. So our aspiration for Grab Insure is to really extend protection insurance to the millions of underserved in Southeast Asia, and we want to find the right model that would reach them. I think fundamentally, well, the problem why that's under insurance, of course, is A, a lot of them don't have enough disposable income. B, they don't have easy reach of affordable insurance. And of course, C is finding affordable insurance. I think a lot of us have been in this space long enough to know that some of the micro insurance offerings that have been offered in the last decade have been, in some respects, quite exorbitantly priced relative to the losses, but that's really due to distribution costs and servicing costs. And that's really why I'm quite excited about Grab and the potential reach and tens of millions of customers to try and get that. So that is something that we've been trying a lot. I think embedded insurance is something I've mentioned before, that we've packaged protection, personal accident protection with our rides, and we've also packaged protection with our packaging, but I'm pretty sure that's really not the kind that we're looking for. We're really looking for more for individual protection, which is what we're all probably quite more passionate about. And our focus so far has been really looking at the gig workers, as Grab obviously is the biggest gig worker platform around. We've been focusing a lot of our attention on it. We've tried several experiments. A few of them is actually one similar to what's NTUC Income presented as the snack. We actually did a similar program with NTUC Income in Singapore called Critical Illness Pay Per Trip, where essentially drivers would be able to allocate a small portion of their income per ride towards building up a critical illness protection for the next year. That has worked reasonably well. It has communicated well to our drivers, and there's a decent uptake. And it is a model that we are exploring also in other countries, but at the same time, we're also trying to explore with a more subscription-based model. Ultimately, a subscription-based model is not hugely different from a traditional insurance policy in most countries. Most countries, it is not a 5 or 10 year commitment to buy a health insurance, for example. Our integrated shield in Singapore, you can cancel virtually anytime and you will get a small partial refund. So I think what we're trying to really do with the subscription basis is to really change it from that 1 year basis to make it a truly flexible subscription. And that is something that we are developing actively with a few of our insurance partners. And we'll be waiting to really try and see the outcome. We'll be launching the first iteration of the subscription-based protection insurance next year. And that is, yeah, so I think I really can't, I'm hoping that it will do really well because it's our next big experiment. But otherwise, we have generally found as well when promoting to our captive driver partner base, they actually don't mind having traditional insurance either. I think the key though with traditional insurance, when we have really discussed it with them, A is to make it very transparent, and B is to make it very simple. And actually, the surprising thing that we really found is that they just want a very good user experience. And that is something that I really truly did not expect coming from the insurance background. It's because I was a naive ivory tower actuary, I think. Actually, they don't really care too much about the price as long as it's decently competitive. They don't really care too much about the benefits either, as long as it's decently competitive and decently comprehensive. What they really makes the difference at the end is a really good customer experience. And when I say customer experience, it actually means both the sign up and the claims and the management. And what we found increased our uptake a lot was actually having a very clean claims experience with our partners, where actually it allowed them to really almost do a digital submission and claims and actually have supported by an offline person in case anything happened. Sounds very normal. And actually what we found is actually doing these kind of normal things really helped a lot. So I think we're still, I'm basically talking about a lot of different topics at the moment, because for us, our thinking about how to reach the greatest amount of people is still very much evolving, and we're still in an experiment mode. So I think I just provided some of the insight we've found from promoting different kinds of products. And we're still in our journey of trying to find the perfect product for us to distribute to the millions of underserved.
I understand. Right. That's very interesting, and hoping to see the product next year. I think one last question perhaps for Alex. I think, I mean, as a co-founder yourself, right? So how do you see the space of InsurTech moving in the near future? Like, would you see the number of companies reducing because of the competition, or do you see more companies coming in?
That's a very good question. So I think for any business, kind of similar to that, there will be a natural attrition, right? So some InsurTech that is not necessarily they don't have good product or viable business model, but sometimes it's just that they run out of fund to carry it forward. So sometimes there'll be a natural attrition due to that. And secondly, it's really about the traction you have in the market, and also which market that you're playing in. Sometimes you have really good product, but you may not really have a good traction. There's someone who's defending that market. So there will be a certain amount of consolidation, but I don't think it will be that much. There will be a lot of new players that I think will be cropping up, because the insurance industry, also the insurance value chain, is so broad that there's a lot of different pieces and elements to be tackled. So where the InsurTech, how I see it, is actually becoming more and more a collaboration model rather than a competitive model. So sometimes it may be called co-opetition. You do compete in certain areas, but you do try to also collaborate on certain partnership and also certain business model. I'm sure that Alan and Yuan is probably seeing the same thing in the industry as well.
Okay, so I think due to time constraint, right, what I'm going to do now is I'm going to jump to the Q&A questions that has been raised. So I think one of the questions that was raised was, how early would you join an InsurTech company? Would you finish your exams first? And how many years of experience would you get before making the transition? Anyone?
I mean, I can start maybe. I think it's a really good question. And I guess I don't know that there's a precise answer that I would give, because I think InsurTechs can potentially offer something to actuaries at all stages in the growth. I would say, you know, if you're starting your career and you haven't finished your exams yet, so I'm a big proponent of finishing your exams if you want to be an actuary. I mean, it's a piece of collateral and an asset that is quite valuable. And I think to what Ewan was saying before as well, right? He mentioned like there's a level of credibility that you get. And then Alex was saying, even going into these fundraising meetings, there's a level of credibility you have. So, and it's easy, I think, early in your career to kind of say, oh, you know, like I should focus on work or do something else. So, I mean, with the, you know, obviously don't sacrifice your family for it, but, you know, otherwise finish your exams. So if you can get into an InsurTech that can support exam progress, then I think that's fine. I think there's still a lot to learn, and you can come out of that process, with a really broad range of experience. And so that can be good, but I think it is something to consider. And in many ways, I almost feel like it's a harder decision to consider at that stage in your career than later. Once you've got some experience, I think that's been my experience at Coherent, and Iwan and Alex also talked about it. What you can bring from kind of having that experience in the industry, in insurance, having those exams and that background is really valuable in InsurTechs. And so you're able to kind of come in and have those conversations and really add value, I think, from day one, whether it's, debating the merits of underwriting or putting together IKEA furniture. I think we can apply our actuarial skills in all areas.
Right. So let's move on to the second question. So I think this question is probably more targeted towards Iwan. Just now you made a comment of creating better user experience. So how do you break the underwriting barrier, creating simpler products with better user experience? And there is always a fear of the underwriting questions not filtering out sufficient anti-selection risk. So how does pricing in an InsurTech firm work differently from a traditional insurer?
Well, yeah. So I think to clarify about that is that Grab Insure is a distribution InsurTech, so we don't really do the actual pricing itself. We do work with a lot of partners to do the pricing, and because we actually have about 3 or 4 actuaries on the team, we do end up having quite detailed discussions. And in this case here, it does dovetail nicely into what I said before about customer experience. And just to give an example, we were trying to launch a CI product in one of our markets actually early this year. And one of the biggest roadblocks that we had was how many underwriting questions to ask. The original underwriters, backed by the reinsurers, I can see the sponsor name over there actually, wanted 6 questions, but we know from our previous experience, for every extra underwriting question that you put onto the customer experience, another 10% will drop off. So our pushback has always been simplify. And of course, understandably, the insurance company and their reinsurance firm wants more questions to really help filter out the risk. And so a lot of it has to come down to the discussion. And what we, from a distributions point of view, what we did was provided a lot more insights on who our customer base are. And that we provided those two. We firstly provided who our customer base are, and that is one thing that Grab does relatively well. We have a general view and profile of who our customer base are. Secondly, we also then shared our marketing and campaign strategy, which is typically going to be targeted to a specific subsegment. So actually, as long as the insurance company and the reinsurer believes in our capability to do the targeted segmentation beforehand and actually ensure that the demographic profile fits closely to the original estimate, then actually we did manage to get down the underwriting questions from 6 to 3. And then from that point onwards, now we're working towards reducing that to 1. But that's a longer journey and probably another question for later.
All right, thanks for that. Okay, so I think the time for us is up. So to conclude this session, right, I think perhaps Alex, could you perhaps comment a few words on what makes a successful actuary in InsurTech?
I think that's also a very big question. I would say being a successful actuary, you actually need to have a lot of support. A lot of support meaning that from your own family as well as your personal support, because joining an InsurTech or joining a startup is really not just on you too, because your working model, the risk that you're taking at different stage of the organization, it requires a lot. So especially if you have a family, you have to kind of take that into consideration for sure. And whether you have your wife or spouse support, whether your kids and the flexibility that you need within the organization, that's very important. And then for any other actuaries who are considering, I would say you really want to figure out if it's the part of the value chain within the insurance industry you really want to tackle, because there's so many different type of insurance technology company or startups in which you can choose or join. So figure out what your passion is and identify where you really want to go and whether this experience will really help propel you to where you really want to be in the next stage.
Cool, thanks. So I think with that we have round up our panel discussion over here. All right, thanks everyone.